Good morning and welcome everyone to the Moneycontrol live stream. We are watching the opening bell and I'm your host Nickey Mirchandani. Indian equity markets may extend weakness, however recovery is eyed. KIF Nifty indicates weak start coming in for the markets, down by 0.25% points, but US market too witnessed it more than 1.5% decline on major indices out there, clocked the worst session since September. Talk about Asian shares, they track in US losses as global rally stalls. US futures, however, are moderately trading higher in early Asian trading. FIIs, that's the one that you need to look out for. That's the number which is now turning a bit negative out there. Net sold shares worth around 1,322 crore and DIIs have bought in equities to an extent of 4,754 crore. Talk about FNOQs. Well, FIIs are the net buyers in index futures, but they've been also buyers in stock futures along with Bank Nifty futures. The only places where they've been selling is Bank Nifty options. FNO ban, what is new in the ban is Ashok Leyland, India Cement. What still remains in the ban is Manappuram, SAIL, Balrampur Chini, National Aluminium, Delta Corp, RBL. What comes out of the ban is Z Limited and IRCTC. Well, option Qs, a bit of positive indicator there, a bit of bullish trend indicator, 0.66 versus 1.13. But that's the limited trade setup information that we have. But let's now go across to Chandan Taparia from Motilal Oswal, who joins us. It's a weekly expiry too. And Chandan, after the huge morning there, after the huge sell-off that we've seen in the previous session, most of the faint hearts will actually exit the market. But is it just a temporary blip, or you think it's a trend reversal of sorts in that case?
Good morning. Thanks for having me. I don't see that there is the trend reversal because somehow we hit the new lifetime high of 21,593. Already we have seen a decent rally of around 2,700 points in last couple of days in the market. So I believe due to this recent change in the market setup, some sort of more decline could be there. So look for 20,850 to 20,750 as an immediate support. I believe some sort of consolidation will be there in the market before we start the next leg of rally. And I think after the strong run-up of 2,700 points, some sort of profit booking and consolidation is the part of market. So as of now, I'm looking at 20,750 to 20,850 to retest, and then only we'll understand the next setup of the market.
Sure, that's the levels that we'd like to watch out for. Of course, that's just a small little advice coming in for the investors. If markets like this, a percent blip really scares you, equity market is not the place for you, because bull markets, there is a point of time where you would see these dips coming in time and again. Perhaps one could just go long or not. Whether they have the appetite is something that you need to watch out for yourself. But right now, given the situation and the fundamentals remain intact, looks like it's just a temporary blip and not a trend reversal of sorts for the markets. Nifty 50, let's look at the losses coming in there. Well, a bit of weakness creeping into the markets, 20,900 mark. That's what we're looking at. And let's talk about the mid-cap along with Bank Nifty, just to see how the momentum is shaping up for Bank Nifty and where the weakness essentially is coming in from. 0.75% of losses coming in for Bank Nifty as well. That's the word. Apart from that, let's look at Midcap, because Midcap index posted the biggest single day fall since December 23rd, 2022. And in today's session, no different out there. 1.5%, more than that coming in, losses coming in on the mid-cap basket overall. Let's also talk about the small cap index. Well, the trend has been no different out there. And let's also look at something like IT stocks to begin with and see if the momentum is actually, the index per se is doing well in trade or not. We've seen some amount of gains coming in after the Accenture's weak show, but a bit of weakness finally creeping into the Nifty IT index overall. But what really is the markets indicating right now, whether we're seeing more amount of losses coming in from the financials name also. Talk about the BSU Bank, just to see where we're seeing some amount of, to bear in mind the fact that this index has been an outperformer through and through the course of the year, and some amount of correction in a market like this is just very, very normal phenomena to take place. Let's look at the top gainers and the top losers out there. Well, top gainers, you have BPCL, IndusInd Bank and Nestle India. These are some of the top gainers that we have. Tech Mahindra, ONGC and Tata Consumer Products. Another top gainers out there. Tech Mahindra and Maruti Suzuki actually are trading a bit lower. DRL, JSW Steel and Hero MotoCorp. Well, these are some of the top losers out there. Chandan, coming back to you. Immediate strategy A on the markets. You think now that there is a little more weakness that we are looking at, the immediate support could be near that 19,000 mark. Strategy in a market like this?
Yeah, so looking at the market, as I mentioned that 20,750 or 20,850 could act as a major support. Yes, we have seen a decline of around 600 points from the tops, but that is part of the market. Already we have seen a decent run up of 2,700 points. So I don't think that this profit booking is the reason for panic. But yes, when it happens after a long time and we forget that profit booking also is the part of market, then it creates some sort of concerns in the mind. Now looking at the Bank Nifty index, Bank Nifty also witnessed decline, but major support goes to 46,500 zone. So I believe 46,500 could provide some stability in the Bank Nifty. So some sort of more profit booking could be there. Bounce could be kept because participant will try to reduce some positions looking at the market volatility. But yes, if you're looking for positional point of view, then I don't see any major concern in the Indian markets.
Sure. What's the strategy you think now the traders should be looking at? Is it still a buy on dips market, or should it be a wait on the sidelines approach, wait for a little more profit booking to enter in and then perhaps dip into the markets?
Yeah, so second thought which you suggested can be applied, that wait for some more dip and go over. But again, in this market, you can pick selective counter which are showing the strength and finding some resilience at the time of market decline. So one such name is Voltas. We have positive view on the same. Technically, it has given a breakout on the daily and the weekly scale. So with support of 910, one can see an upward towards 970. ONGC will be other name. ONGC and All India are two name which I like the most in this market. Can accumulate and looks good. So ONGC stock one can buy with support of 200, can go to 215. All India one can buy with support of around 355, can head towards 400 plus. So All India, ONGC, Volta, these are the couple of names which can provide some stability even in this market scenario. And other heavyweights name, I think one need to look at for some more decline to accumulate these stocks.
Oil India has also been trading near that 14-year high level. Do bear in mind the fact that we've seen some amount of traction already building in on this one. But Chandan, also some names like IT index per se, and also apart from that, something like Mazagon and BSE. Of the three, what do you like?
So if you ask me all three names, these are a couple of my favorites. BSE was holding well to its 20-day exponential moving average. So I believe 2200 could act as a support. So if you want to buy, keep a strict stop loss of 2200 zone. Mazagon and Cochin, if you ask two name, I'll go with the Cochin. Can go with buy on decline, let it decline further, then I'll accumulate it. With support of 1200, look for 1320 on upside in the counter.
All right, Chandan, we are going to be addressing in stocks and news. Please stay on the sidelines. With that, we're going to get back to you in just a jiffy. Inox India, where cryogenic tank manufacturer is going to be making it's going to be listing on exchanges today. And the company has set the final issue price of around 660 per share. There is a strong gain which is expected to an extent of 75 to 80%. Experts say that that's going to happen, even, or they're just anticipating that even in the market where we're witnessing some amount of profit booking. Do keep in mind the fact that we are also looking at newly listed entity Inox India, which has got no listed comparable whatsoever. Talk about Mazagon Dockyard. The company has signed in a contract worth around 1,600 crore with the acquisition wing of Ministry of Defence for construction and delivery of 6 next generation offshore vessels for Indian coast. Also, keep an eye out on this one. It's gathered as much as 3.5% uptick in today's session. Apart from that, Cochin Shipyard, the company has signed in a 500 crore contract with Ministry of Defence for Indian naval ship. The package includes repair and maintenance. Again, an order coming there. BSE, that's another one that you need to keep an eye out on. Well, both Cochin as well as Mazagon, 2.5%, 3.5% gains out there. Buzzing stock of the day. BSE, the SEBI has approved appointment of Pramod Agarwal now as the chairman on the governing board of the stock exchange with effect from Jan 17, 2024. SS Mundra, the chairman and the public interest director, will be ending his term on Jan 16. Now, do bear in mind the fact that he was also the former deputy governor of RBI, but the newly appointed chairman now is a former IAS officer of Madhya Pradesh and has served as Coal India's chairman from Feb 2020 to June 2023. So what really happens in that management and the kind of derivative action that you can see from the stock, that is the one that you need to watch out for within that BSE space. But Saturn Credit Care is also raising in funds to an extent of 250 odd crore from QIP, and that comes at a price of around 230 per share. The issue has been launched on December 14, which was oversubscribed by 1.19. Also, we have a note coming in on agri inputs, a bit of downgrade actually. HSBC said that the sector is expected to revive in the second half of this financial year. But let's go across to Chandan and check with him. Okay, so let's actually further talk about HSBC on agri inputs, where there is a revival which is led by pesticide price stability and higher crop prices. Essentially, we are looking at some amount of buy target on UPL, and also target has been raised for Dhanuka Agri. There's a downgrade which is coming on Rallis to reduce. So that's the word coming in when we talk about the stocks in news per se. But let's actually now navigate our conversation more towards the fundamental side, which is see how the FII traction has been moving, how the market trend further is expected to move here on. And let's bring on board Aishvarya Dadheech, the founder and CIO at FIDENT Asset Management put together. Morning there. I hope you've got your name pretty right. Apologies for the error, if any. But I'd like to start off with what do you make out of the current market situation that we're looking at? A bit of correction that came into the markets yesterday. 1.5% was lost, and it was not even just a day. It was just 1 hour of profit booking which took place. You think it's just a temporary blip, or you think there is further amount of weakness which is expected to creep in?
Good morning, Nickey, and good morning to all the viewers, and thanks for having me here.
Pleasure.
Obviously, it's a tricky week. We saw, as you said, that there was a sudden, decline in the market. We witnessed it in India. Even yesterday night, we saw the same thing happen in USA. And possibly the scare it's kind of profit booking, which got accentuated because of, the COVID scare when we heard about cases in Kerala and Karnataka coming up, the new variant. So more than that, if we look at it, is more of a profit booking. So if you really see, Nickey, that mid-cap and small cap, which burnt the highest, investors' wealth yesterday, even after that, I would say mid-cap is up more than 35% so far in this last 1 year, and small cap is still 40% plus for the last 1 year. So I believe for investor, it is just a blip. Obviously, as we have highlighted earlier, the valuation of mid and small cap are not comforting. Rightly, we will enter the next quarter in couple of weeks, and it is very important that fundamentals get support by better results to justify this kind of valuations which are there. I was looking at this data, which we normally track is, the market cap to GDP. And I was surprised and want to bring to everybody's viewers' interest is that if you look at the small cap and the mid cap, market cap compared it to our GDP, they are inching to a 25% and 20%. Mid cap is almost hitting to a 25% and small cap at 20%. They are almost in line with what we saw in 2007, right? Obviously, we have fundamentals intact over there that if you look at from 2023 to 2025, the earning growth expectations of mid-cap index and small cap in the range of 25% and 30%, right? So those valuations can, to an extent, be justified by this kind of earning growth, but definitely there's a lot of froth in many of those sectors. And I would advise investors to be cautious going ahead. For yesterday, I strongly believe it is more of a consolidation. I believe this is a healthy consolidation. If you are an investor, it should not worry you much. But if you are not an investor, this volatility will stay here for the coming weeks.
And you say coming weeks, and you advise a sense of caution. This is particularly for large caps or mid caps. Do you think yesterday that we saw was a normal profit booking, at least when it comes to the small cap space, or it indicates a change in market momentum?
If you look at this last, 7 weeks when the market really jumped up, so fiercely, and even in this month of December, what is important for us to know that actually large cap has outperformed mid and small cap so far in the month of December. And we should also know that this is a lull period where majority of the people go for vacations, and even the participation of FIs is, relatively limited. So in these scenarios, the HNI plays an important part. And whatever we saw yesterday was kind of a profit booking which happened more in mid and small cap compared to large cap. So as earlier indicated, we believe large cap is somewhere people should start shifting their earned money from here onwards. And this trend is expected to continue in my understanding.
Well, point well taken.
That large cap will continue to outperform mid and small cap, at least large part of December and January.
All right, point well taken there. But let's also talk about IT stocks per se. A bit of weakness is finally seen, or let's just say a little bit of weakness is seen in today's session. We've seen some amount of traction building up in the names thus far in the week. Accenture's weak outlook also did not ruffle much feathers around. What do you make out of IT sector right now, and which are the stocks within the space that you like, and why?
Right. So obviously we saw what Accenture reported, and they were, I won't say that Accenture was a completely washout. If you look at their bookings, both consulting and outsourcing, as well as the employee addition, and obviously the demeanor was that the guidance for the next quarter was kept in the range of -2 to +2 compared to 0 to 4% expectations which were there earlier. But the clear trend of strong bookings, strong deal wins, and possibly revival by after the first half of calendar 2024, possibly is giving us a signal that all that is not bad in the IT space in US. So back home, again and again, because of this, I would say a couple of quarters might look bad. This is a washout quarter, seasonally weak quarter, and we will expect that, it will be extension of what numbers we saw last quarter. And this weak set of numbers will roll out at least for 2 quarters in my assessment. But the strong set of economic data which we are witnessing in US and revival in Europe over the last 2-3 quarters, we believe that possibly by end of calendar 2024, we will see some strong revival in the IT revenue side. If you see the last 2 quarters, we have seen strong deal wins across the board, whether it is large cap, mid cap, and small cap. So there has been a lot of leakages happening. Deals are not being converted into revenue over the last 2-3 quarters, but that trend should unwind in the later part of calendar 2024. On top of it, Nickey, we have also seen that the US US 10-year has gone below 390. It's close to 385 today. That will also provide support to technology stock. So all in all, I believe it could be remunerative for someone to go long on large cap ITs. Right, because in mid and small cap ITs, we are seeing that valuations are really stretched, given the context. So I see a lot of valuations comfort in large cap IT, and I believe that is the 4-5 names where you have comfort on growth can possibly give you 15-20% return for the next 2 years, compounding.
Okay, so top 2 picks within the space.
We as far as large caps concerned, we like that. TCS is one name which is very. If I just look at the deal wins that they've gone in the last 2-3 quarters, I believe TCS should be a good buy at these levels. And in mid cap side, we have a lot of comfort on play like Persistent. Obviously, valuations are a bit stretched. And even in play like Emphasis, if you see the last couple of quarters, there is a clear trend of revival happening both on margin and growth. So those would be the names which possibly could create a good, compounding story for the next 2-3 years.
I want to chat with you about Mazagon Dockyard and Cochin Shipyard. These are apparently the 2 names which have, one of the buzzing counters in today's session. We've seen some traction there on account of the order win that's coming from the defense space, of course. With what has been done, with the wealth that has been created by Mazagon, what do you think The valuations look attractive at this point of time. How are you approaching these two counters?
So obviously, if you look at this particular segment, the kind of order win intensity which has been witnessed is phenomenal. And with the current, government focus, we believe this order continuity will, be the trend for the next 2 to 3 years. Given this, the government continue after the general elections we have in May. So from business perspective, from companies revenue, EBITDA growth perspective, operational perspective, things are pretty solid. But on valuation side, we at FIDENT are not very comfortable given the rally that we have seen in stocks like this. So I would advise investors to be cautious because in this kind of company, it is very important that valuation go in sync with the fundamentals here. So, obviously we have a support on I would say, the operational parameters, but there is little left on the table for investors because the runway that has been very steep. And we at FIDENT are not very comfortable to get into businesses where valuations are so stretched.
All right, that's the word coming in. Of course, we are also wanting to talk about BSE and the other exchange-related stocks. Like BSE more so from a point of view that there is a new chairman at the helm, of course. What do you make out of exchange-related stocks? And of course, now BSE also, which has gained significant amount of momentum. Derivative segment is yet to pick up pace, but we're seeing additions now incrementally happening even towards NSE, which is adding to that pool. How do you see that shaping up in the near-term future for BSE?
BSE has been one of the biggest wealth creator for investors over the last year or so. And the kudos goes to the management where they've been able to ramp up a lot of those derivative-based platform and the operational parameters has been nothing less than miraculous. And that's why if you look at the valuations has a lot of support from the fundamentals which has been derived. Right. And if you look at the PAT growth for the next 2 to 3 years, the street is very positive on their outlook. And obviously, I always say that this kind of businesses are quasi monopolies. There are just two players in this segment. And we as India's ecosystem from that side, I think these two players will meaningfully benefit out of the whole shift of economic growth and even the market cap addition that will happen over the coming 4 to 5 years. So we are very positive on exchange related, whether it is BSE. Obviously, NSE is due to be listed. But we see this space very attractively. Obviously, BSE valuations have got stretched a lot, but we believe that the earning momentum is in sync with what the valuations are. So investors can stay put into the names of this BSE. And obviously, the additions to the management team, I believe it's a welcome change.
All right, that's the word. Apparently, Oil India, ONGC, these are also some of the counters which have been doing extremely well in trade. Oil India at least was at 14-year high. In light with what's happening across crude oil and the worries that we're looking at, how are you approaching this space now?
So if you look at in the last, since September, crude oil is roughly down 20%. Right, and we have seen that it has benefited all of these OMC players and the rally we witnessed into this kind of players which you highlighted. But going ahead, given the strong US economic data revival in I would say European side, and we are hearing about teething issues in the Red Seas and the Suez Canal and things like that. The possibility and possibly we obviously the drag has been on China growth, but if we see some large impetus been announced in China, possibly we are closer toward the bottom of the crude prices. So in my assessment, crude should either stay here or they should go up in the range of $80-85. And we have to look at it from that perspective that if that stays in that range, the upstream companies as well as the downstream company will have to be act accordingly. So we normally at FIDENT avoid these kind of businesses because of both macro commodity related risk as well as the government risk. But the rally that we have witnessed is more or less, I want to say, is been factored into because of the decline in crude prices, especially for the oil marketing companies. Going ahead, it will be tricky because if crude swings back, Obviously, we will see that, that auto-fuel related things will start impacting OMCs there, and possibly, that rail can get some sort of jolt going ahead. So we are watchful about crude prices, but I would believe that, large part of the rally more or less has been done in this kind of sectors.
What do you make out of Inox India also? Because, that's an issue which is going to be, the IPO which is going to be listed today, in some time now. Experts around the corner are expecting a 75-80% kind of premium coming in on this one in a market week market like this as well. It's a complete OFS offer with no listed peer group in India whatsoever. What do you think about it?
No, I seriously believe that there is a craziness in your SME IPO market, and even in the main board IPO market. We saw a lot of good companies getting listed. Yesterday we saw DOMS, had a very good listing. And obviously, as you said about Inox, this is one business which has a very limited, I would say, similar peers. And being an OFS, we believe the interest will not dilute much even in this weak market. So I believe these companies will obviously have a good listing. And we are seeing a plethora of IPOs coming over the next month or two. And many of them are very, very, I would say, attractive businesses. But we normally, at FIDENT, we normally stay away from IPOs. We believe that valuations in that particular segments are not very, very attractive for investors to compound money from 3-year perspective. So, that is time we remain very judicious in our assessment of identifying great businesses in sync with valuations.
All right, Aishwarya, I was just going to leave it at that. And thank you so much for offering that perspective to us.
Thank you so much. Thank you so much.
All right, that's all that we have. Inox India is apparently going to be listing in today, so do keep an eye out on that one after the phenomenal gains that we've seen for DOMS. It's the largest supplier of cryogenic equipment in India with no listed peer, debt-free company with revenue growth of 25 to 30 odd %. Need for visibility essentially in export market makes the company go public and today gets listed. Okay. With this, it's a wrap and goodbye from the entire team who puts this piece together. Now, thank you for watching and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.